Let's stick to the focus on earnings. Vaibhav Global is a stock that declared its numbers earlier. Since then, the stock has done well. The management is now joining us. Puru Aggarwal, Group CFO at Vaibhav Global. So first, before we go to the numbers, can you start with the retail sector outlook into US and UK? You cater to the largest market. How has the business been there, especially when you consider that it was the year end and it's like a festive season over there?
Good morning to you and your viewers. Both the markets are pretty steady, and the business we are in is deep discounting business. Such kind of business is going to do well in all the economic scenarios. Just to give an example, US has been doing pretty well for last many years, and so have been we also. Our channel over there has been doing very well. Opposite to that, UK has been having some stress for last 2.5 years post-Brexit. Despite that, our business has been growing very steadily there. So, which means that this model works in both the scenarios. And the reason is that our offering is high quality, excellent designs at a very affordable price. So, this business model is very unbeatable. And that is the reason that both the markets, they are going to do very well going forward as well.
So the structural story then, according to you, remains intact. How do you see growth from here on, the kind of channels or triggers that you're betting on?
Sorry, connection is bad. Can you repeat, please?
Of course. So then, according to you, do you see the overall structural story remaining intact? And if you are seeing growth, where, through which triggers or channels do you really see it coming back?
Yeah, so this is a structural story. As I said, markets are very steady and our business model is very robust. So we see excellent growth in both the markets going forward. And we are pretty confident of delivering the top line as well as increased bottom line. As you know that the model is such that large part of the cost is fixed. So which means when the top line grows, it flows to the bottom very quickly. And that's going to happen in future as well.
What would that mean for ROEs and ROCs? Do you see that going up? Do you see gross margins only increasing from here on as volumes go up?
So gross margins actually have been already pretty robust, is 60% plus, and that's our guidance to the market that in quarters and years to come, it is going to be maintained like that, very robust, very strong. And because of the business model where large part of the cost is fixed, there would be leveraging on cost, which means EBITDA expansion will happen. We have seen in last 4.5 years, EBITDA continuously expanding, and that's going to happen in quarters and years to come as well.
Okay. Now, in 2018, we had seen a record-breaking holiday season for the online retailers in the US. Did 2019 see any further improvement? Have you managed to scale past that?
Yeah, so retail business in US has been doing very well, and so are we. In UK, as I said, the business model is so strong that in stress time also it works very well, because those who are buying from high-end or high-end streets or high-end price branded products, they do not want to compromise on quality, but they do want to look for low price points, and there we come into picture. So we offer excellent products, high quality products, and at an affordable price. So which means the top end sales starts cannibalizing in stress time, and UK has been witnessing that. As a result, we have been doing very well there also.
Okay. And e-commerce as well has been about 10% of the total sales back in 2018. I'm sure the mix must have changed quite significantly. So what is e-commerce as part of your total revenue component, and how do you see it scaling up?
Yeah, so both the channels are doing very well, which means TV as well as e-com. And e-com here means that is web platform which you are operating on. Web is growing even faster TV has been growing, we have been growing even faster. Just to give you an example, last quarter ended, our TV business grew by 11% and web grew by 21%. And that trend we see continuous.
Okay. Now, approximately 70% of your sales also come from TV, and given the ongoing digital revolution, that shift towards now streaming services, is that impacting, you know, the sales through TV in any way?
So our business model is absolutely integrated, which means all the selling platforms, they are integrated to each other. On TV, we are driving sales from TV to web, because on web the transaction cost is 0, and making a transaction on web is very convenient, because one can make purchase from anywhere, from airport or from railway station or from bus or from hotel or from home. It does not have any limitation. While on TV, if people have smart TV, they can make the purchases online. Otherwise, one needs to make a call to the call center, which has some cost. So effortfully, we are making our business drive from TV to web. So the whole business model is very integrated. Internally, we do not see TV and web separately. But regardless, TV itself has been growing and web is growing faster.
All right, we'll let you go on that note. Appreciate you taking the time out and joining in with your take on how business is shaping up, as well as the kind of profit growth that you have witnessed. Well, that's Vaibhav Global for you, the stock holding out currently.